Thinking about buying a home in 2025? You're not alone. Headlines are confusing. Inventory's up, rates are high, prices are stalling. It's tough to know if you should buy now or wait. For every bit of good news, there's a catch: more homes, but higher payments. Prices cooling, but will they drop more? Today we'll cut through the noise and give you the real facts. No hype, no BS. We'll break down inventory, prices, interest rates, and the steps to get financially ready. By the end, you'll have a clear framework to decide if 2025 is your year to buy. Let's dive in. Good news, inventory is finally rising. For years, buyers fought over scraps. Now you have real choices. More homes on the market means less desperation and more negotiating power for you. Don't rush. Walk through at least 3 to 5 comparable homes before making an offer. This helps you spot real value and strengthens your negotiating position. With more options, you can avoid overpaying and get the best deal. The days of sellers calling all the shots are fading. Use this shift to your advantage. Are home prices going to crash? Highly unlikely. Today's market is nothing like 2008. There's stronger demand and less risky lending. Prices are correcting, not collapsing. Think slow descent, not free fall. In hot markets, expect more price reductions and longer listing times. If you're not in a rush, waiting could help. But don't try to time the bottom. The right time to buy is when you're financially and personally ready. Focus on your own situation, not market predictions. Interest rates are high, and that's squeezing affordability. Don't count on rates dropping fast. Plan for today's numbers. Consider refinancing later if rates fall. Marry the house, date the rate. Negotiate for a seller-paid rate buydown to lower your initial payments. Explore different loan products. An ARM might save you money if you plan to move or refinance soon. Always ask lenders to show you rate scenarios with and without points. Compare the math before deciding. Get creative to make your budget work. Before house hunting, check your finances. Aim for a credit score of 740 plus for the best rates. Pay bills on time and reduce debt. Save for both a down payment and closing costs. Budget 5% of the home price for fees. Don't make big financial changes before applying. Avoid new debt, job switches, or opening new credit cards. Lenders want stability and a pattern of saving. A steady job, good credit, and cash reserves are your ticket to approval. Prep your finances months in advance. Be the borrower lenders want to say yes to. Don't just shop for homes, shop for your mortgage too. Get loan estimates from at least 3 to 5 lenders, including banks, credit unions, and online options. Compare not just rates but APR and fees. Sometimes a slightly higher rate with lower fees is the better deal. Consider using a mortgage broker. They can shop multiple lenders for you. Even a 0.5% difference can save you tens of thousands over the life of your loan. Take the time to find the best fit. Found your house? Now don't skip inspections. Always get a general home inspection, no exceptions. Consider specialized inspections: sewer, pest, radon, or structural, depending on the property. These cost a few $100s but can save you from massive surprises. Use inspection results to negotiate repairs or credits for major issues. Be ready to walk away if the seller won't address serious problems. Protect yourself, don't buy a money pit. So, should you buy in 2025? It depends on you. If you're financially stable, have a solid job, and plan to stay put, you can buy smart, even in this market. You'll have more options and negotiating power. But if you're stretching your budget or banking on rates dropping soon, waiting might be wiser. The best decision is the one that lets you sleep at night. Don't let FOMO rush you. Analyze your numbers and move when you're ready. Let us know in the comments. Are you buying or waiting? Like and subscribe for more no-fluff real estate advice.